All right, what's going on, everybody? This is Eric here, eRoo as you know me, over with Investor Central Club and STAX AI. We did have FOMC just today, and we see a little bit of market movement. I wanted to get on here a little bit earlier than we usually do. We usually get on here at about 12:30, but I wanted to point out that STAX basically caught the move, and I wanted to show you guys that. If I were to pull up our charts real quick, show you guys here. FOMC started at about 11:35, or the move started at 11:35. We basically see a bottom here at about 11:42, 11:43. That's when we start to see this reversal. And I want to point out how STAX had a lot of insights into that. So if I go in here, I go back to that exact point. So you'll see actually from when we started to see the move, 11:35, we just see all these puts and all these calls being sold. Okay, and just basically the entire STAX flow started to flood red. Then right at about 11:41 to 11:42, that's when you start to see it stop and change and flip over to now all these puts being sold and calls being bought. 11:43 right here. We started to see everything start to flood red. Okay, so that's one of the ways that you can get insights with STAX as to what is potentially about to happen and when that move is going to be over. Another thing to consider is our STAX WaveX tool, which is basically going to give you all the options flow for SPY and any ticker that you're looking up. Earlier today, at about 9 o'clock or so in the morning, we started to see a lot of puts being taken. They started to position themselves for the downside. And what do you know? You see, SPY goes from a high of about 688 and drops to 683, a $5 move on SPY as the FOMC starts. Okay, so we all expected volatility. We're not sure what direction things were going to go, but we did have a high expectation of a 25-point rate cut, and a lot of that was already baked into the price of the markets. So I think just getting what we saw, obviously Powell's trying to reason his way through it and give everybody, their expectations and what's supposed to continue happening. But the markets, I feel that it was expected. We didn't see a giant sell-off. This is like what, 0.8%. So a small move down, just because again people took their profits. And then we started to see it come back, especially as we start to see the flow come in. We do have some big earnings coming up today too. So I want you guys to understand that at the end of the day, big tech earnings that are coming up for today and tomorrow very likely actually push us back up. And SPY could be testing 700. That was actually Max's prediction earlier this week, that we could be seeing 700 pretty soon. There's a lot of people saying we'll see 700 by the end of the year, but if we see solid tech earnings this week, I actually think that is a very good possibility. We're seeing a lot of money still flowing into the markets at this point. The thing about SPY that I'm a little bit concerned with is that we are very, very high up in terms of just overall. And what I mean is, if I go in here, my initial prediction was that we're going to come and fill. We have like 2 or 3 gaps that we've had with continued gap ups. We did just fill the most recent one. We still got 2 of them down below us at this point. So there is still a little bit of a risk to the downside as of right now. Generally don't love to see these gaps being left unfilled, but we do have these 2 that still exist. Now, if you guys understand standard deviations, there's something called the Bollinger Band. The Bollinger Band is a situation where, let me just make this a little bit easier to see. Okay. So what we have are this blue line on the top, the red line in the middle, and then the other blue line on the bottom. Okay, let me make sure those are my colors too. Yeah, so we got the daily 5 moving average, the daily 10 moving average, and then what we have are the upper and the lower bound of the Bollinger Band. A Bollinger Band is basically a standard deviation calculation from the average. So right here we can see that we do have the 10-day moving average in orange, and we also have our, 2.5 is where I've set this. 2.5 standard deviations to the upside, 2.5 standard deviations to the downside. If you take a look at it, I know it's a little bit hard. Let me change the color of it so it might be easier for you guys. Use white. That white line, and when we come very close to the white line on the upper side, it often does mark a possibility of a reversal starting to come. All right, obviously there are times where we're moving very strong alongside with it, but when we start to touch that upper bound, it just basically means that price is more so on the overbought side when it's on the top. When it's on the bottom, it means we're oversold. And so it's kind of a way, instead of using regular indicators like your RSI or stochastic, things like that, ultimately it does show that there is a possibility we could have a little bit of a sell-off. Something that was also interesting, and we were pointing this out in our stream yesterday in our Discord, was that there were some very interesting big money QQQ positions taken yesterday. Let me find that for you real quick. Right here. Okay. So we saw QQQ puts being bought for March 585, 181 million, but then they also sold those puts for the same strike at 545, 106 mil. So it cost them about $75 million total for this position, expecting anywhere between a 7.5 to about a 13, almost 14% drop for now. Okay, so with us being this overextended to the upside, it is a very good possibility, and that, I mean, a 10% drawdown on the indices, either before this full Santa rally, after the Santa rally, who knows when that'll exactly happen, it is a possibility. We still do have the trade deal with China still on the table. We still have the government shutdown that still hasn't been resolved. So there are there's still some risk factors in the market right now. But we do seem to just keep going up and keep going up higher, especially as we see money for the AI trade continuing to flow in. So just something I want you guys to consider here, that ultimately there still is risk to the downside, but we are, after today with FOMC, we actually are still seeing, a lot of this dip still being bought up. Okay, so it's still fairly, you can see I'm just going through everything that's happened for today. It's still fairly green going into, after this meeting that we had. Give me 1 second. All right. Max, you want to chime in on anything about the meeting today? I know you mentioned just a moment ago it was kind of boring. I agree. Nothing completely new in terms of anything that was said, but expectations, things like that. Was there anything that stood out to you that you want to share?
I mean, honestly, we've kind of been anticipating this since the last rate cut decision. Like, I think literally the next day we were all starting to talk about the next cut, and it was basically Moran's going to come in and disagree with everybody and ask for another 50 point. Schmid doesn't want to cut anything, and he's been saying that since they've been surveying. And Gouldsby was the only other way to was the only one that was like really concerned, because they're basically cutting rates into stagflation. And that's like the big worry. And the reason why we saw that initial sell-off is because he did come. There were some interesting things. Like he came out early and he basically said, "Hey, I don't believe." He basically said tariffs are causing prices to increase, which no one likes that. Then he said because the government shut down, we don't have our normal data. A December cut is not a guarantee or for a surefire thing at this point either. So those were kind of the two catalysts that sent things down. Then obviously he walked back a lot of what he said, and that's why we saw this little rally back to the 686 level. But I will say there's a big demand zone that starts at 686.13 that it has not been able to close above on SPY, and that's why we're kind of seeing the movement we're seeing. But I pretty much agree. Like as long as earnings come out solid, meaning Google comes out, reports 100 billion in revenue, because even though it's expected 99 billion, they are calling it the $100 billion question. Meta is at a $50 billion question. Microsoft obviously should do well after getting the 27% open AI stake recently, or literally yesterday. So it's one of those things where we were expecting this move, but if you were watching flow, honestly, a lot of it is hedging versus position building. Position building, you're typically going to see you're going to see blocks and walls being built of same strike, same date, similar size, and they're going to typically be sweeps and not blocks because it shows those people want to get in right now. When we see hedging, that's where we'll see some downside exposure, but it's a much more shorter dated, and they're going to be closer to in the money. And then if they're buying insurance, that's when you see those crazy, like someone dropped $4 million on Tesla puts for the 190 strike. And you're like, what? And it's 2 years away, by the way. That's basically buying like fire insurance. So we've been seeing a lot more hedging versus positioning. The only thing I've been seeing positioning in right now are narrative plays, meaning NVIDIA, the AI narrative. Is pretty much the only thing where we're seeing aggressive positioning on options flow on a daily basis. But anytime I've kind of dumbed it down to blocks are more hedging versus a sweep, where that is showing more so like aggressive positioning for the long term. Also long-term insurance. But blocks, that's typically going to give you an indication of something being a hedge against a broader position to minimize downside exposure, especially when we see those big golden big buy sweeps and that kind of stuff, or any unusuals that come in over $1 million typically. Those are going to be where we see that more. Yeah, no, Grandizer, you'll see it. Like you'll see Tesla get some absurd strike prices that are like 2 years out, that are like sub 200 sometimes, or like literally $150 out of the money at this point. So it's just it's basically buying fire insurance because the premiums are cheap for them, so they don't have to spend a lot of money. But if the world ended tomorrow, they wouldn't lose their ass for their longer exposure data. So that's just one thing to like look at, is understanding like what is a block, what is a sweep, what is like the context of the order with the position that the market's in right now. So that's really where like we've been focusing, is taking that stuff and then pairing it with like our economic events and economic data to kind of understand what are institutions expecting, and that also kind of gives you insights into, oh, this person knew something or knew something about a move. Logitech was a great example, by the way, of someone who knew something going into earnings, because we saw a big order for it. It's not something that gets hit up very often. I think it was over $500,000. So it was kind of an easy no-brainer to take a gamble on it because it doesn't get a ton of volume. So, and mind you, we have time on those. May 15th, 2026 is the expiration on those, and they've been just chilling at between 16 and 25% today. So it really just comes down to understand what you're reading and then kind of pair it with that economic data, and it'll kind of give you insights into how the market's going to react.
Yep. With
Oh yeah,
that being,
C4. I agree. Blocks could be an accumulation in a support and resistance zone, and that's the other thing is if you see blocks being bought up, but typically you'd want to see like multiple blocks across different strikes to show support and resistance, and then that's also when you would start to look into are people selling calls or are they selling puts, because that also will show where people believe support and resistance will be psychologically as well, aka like the next big level that we would look at, for where people are accumulating, where people are profit taking, and most importantly, building out those longer term positions, because that's, let's be honest, as options traders, that's kind of the sweet spot. When you can find those long term positions that are within your budget, that's when you find the winners. That's when you have more money to continue to trade the next day. So yeah, that's my TED talk. Thank you.
with that being said, we do have earnings coming up for today. We got some big names. We do have Meta, we got Microsoft, Google, we got Chipotle, Carvana, ServiceNow, and Starbucks. I think those are the ones we probably want to take a look at. A few reporting tomorrow before open. And then we obviously have at close tomorrow. We got Amazon, Apple, Coinbase, MicroStrategy, Riot, Cloudflare, even Roku. And then Friday before open, we got ExxonMobil, Chevron, AbbVie. So yeah, we got a lot to go over. We'll try to get to as much as we can, especially before market closes. See if we can see anything interesting. Now I will point out, when I was first looking at it, the first thing I was noticing was that everybody was positioned for the downside for this little pullback. So it's a little bit hard. I will say it's a little bit hard to say. Like, for example, right now you see Meta. We're actually very heavy in puts right here, if you see what WaveX is showing. And Meta did already move down. So starting from the morning, Meta was at a spot price of 753, and it went to a low of 743. Now the question is that their earnings play, or is that more of an FOMC type of thing? So that's the issue here, that there is the coincidence that they're showing up on the same day. In terms of the flow in particular for today, we are seeing some calls being bought. There is a one big money 730 for the puts for January 16th, 2026. What sticks out more to me as earnings plays are these ones that are aiming for Friday. The 1031 760 calls, 1031 700 puts. It's hard to say right now with what Meta flow says. If I go ahead and pull up a chart for Meta's been moving pretty strong overall. And I already said that it was going to come and fill this gap below that it had. It's already done what I said in terms of this. Is it ready for a move back up, or do we maybe see a little more selling off and them positioning for better, and higher returns down the line? So flow's
I
mixed, WaveX
I
is
don't
mixed. Yeah.
I don't know, man, because there's a big rumor going around right now.
What is it?
So right now, Meta is pretty much priced out of anyone in retail being able to afford it.
Mm-hmm. Oh yeah.
If they report 50 billion in revenue or greater, then we could see a 10-for-1 stock split, because we would see a 10-for-1 because it would probably shoot up to about $800 to $850, which is my upside target. And if we get to that $850 mark, I would not be shocked to see a 10-for-1 stock split announcement come tomorrow or Friday this week. So basically, if Zuck can pull off the perfect quarter, by the way, I have all of these earning previews done as well. So I made sure to, that's why I kind of crashed yesterday, FYI. I was up for like 9 hours writing earnings reports the night before and didn't realize it was 7 a.m. So hats off to me. But with Meta, basically a 10-for-1 stock split, margin expansion from AI ad tools, and confident tone around AI agents and monetization. That's the bull case for them. If it hits 800 to 850, that 10-for-1 is basically going to be baked in. The risk, though, there's a CapEx bloat that's going through AI right now. There's AI fatigue as well, and user growth is stagnant. So CapEx, it's 105. If it comes in at greater than 105 billion for 2026, because that's why everyone said, that's why the title is $100 billion like question for them, because they're spending 100 billion on CapEx. If their margins shrink, if they have weak AI or ad commentary and pressure from Sora or TikTok AI, there's no stock split, sloppy AI ROI narrative, and spending surge without a real strategy out there, then we could see it revisit 705 to 720 potentially. Meta's never split a stock ever, by the way. And that $800 that retail traders are basically boxed out of right now. So basically, we want 50 bill in revenue, clean margins, and a stock split plus new all-time highs, and then we will see Meta Moon. If not, we could definitely see it revisit these downside targets of like 730 to 720 and below. Just because it is a stock that is very sensitive to that kind of stuff as well. So, but I'm kind of optimistic about them, if I'm being honest, just based on what I've seen with flow, with what I've seen where buyers are stepping in. People got to know something if they're buying this confidently this often.
Yeah.
Because if we think about it, we don't see as much selling in Meta as we do buying. And going into a pivotal earnings report right now, that's definitely a little bit of a bullish flag for me. But again, that CapEx bloat is very much real for a lot of these AI companies, as we've seen.
Couple of things about that. So first off, if you guys are not already in our Discord or have a STAX subscription, that's where you can get a lot of Max's write-ups for these earnings reports. Like he said, he's been putting in the work and has a lot of this information ready for you guys well before these earnings come out. You also do have the option, if you want, his Substack is below in our description box. If you get a subscription to that, you will also be able to get the earnings reports through there. But with it, so his Substacks will give you the write-ups, will give you the analysis there. But if you want flow, you want to find out what positions that people are getting into, and the STAX flow, that's where you want the STAX subscription or the Discord subscription. You can use eRoo Love STAX, which is also in the description box below, if you want 20% off our STAX subscription. If you do want a subscription to our Discord, you can use the code Lifetime20. That'll get you 20% off the lifetime subscription if you do want that. And I agree with you, Max, on this Meta chart. And one of the things is a lot of tech right now is approaching or at those all-time highs already. And going into an earnings with it at an all-time high makes it really hard to gauge whether or not we're going to see continued upside. The thing about Meta, though, is it's come back down, and it's, you know, it's kind of hovered around in previous all-time high territory, and it has broken back up. And with the way that Zuckerberg really runs the company, I would not be surprised to see them, you know, output a very strong earnings report with great guidance, and that's where we'll see it retest those 800, you know, that 800 mark, and possibly new all-time highs, leading into what you said as well, a stock split. The thing I just don't love right now is because of the mixed signals that we're getting because of FOMC.
Yeah.
Is kind of where it's hard to gauge this earnings play. You know, I wish that FOMC was on a different day that didn't coincide with it. I think flow would definitely be a lot more determinant of what direction we want to see it go. We will keep an eye out on it as well. I will give you an example from yesterday in a moment. Maybe we will see something in the next 20 minutes or so that gives us an idea of what direction to go in. But we do see some big money calls being sold. A lot of the big money for Meta right now all happens to be more on the bearish side. So I would just be careful with that. Which brings up yesterday. We saw Bloom Energy BE right at close, 12.57. We saw $1 million come in for a strike that was 60% away from where it stood yesterday at the spot of 112. They went for the 180 strike for next month, and they spent $1 million on it. It was only $3 a contract. Bloom Energy reported earnings, and Bloom Energy shot up quite a bit. Let me show you right here. Now, Bloom Energy went up today on the daily 18%. It was even higher earlier in the day. It went up as high as 144. So from about 112 overnight, you saw over a 20% return on the stock itself. And that's how we use STAX to make sure that we get a little peek and insight into what's happening behind the scenes. Bloom Energy had a 48% beat on EPS, 21% beat on revenue. Somebody definitely knew something was going on with it, and that $3 position, I do believe, I think doubled or tripled overnight. So that's what we're going to try to do here, especially as we get closer to close. Try to see if there's anything, more determinant that gives us an idea of calls or puts. Right now, we'll say, though, Meta does, if I'm going off of flow, Meta's flow is showing it to be bearish at this point. So that's just something I want to point out. Yeah. Next, what we got? Microsoft. Let's jump into the chart first real quick, since I have it up. Okay. Like I said, it's harder to tell when we're right here at all-time highs. Microsoft is showing this like double top look to it, which is kind of ugly to see. I would not be surprised to see it maybe come back down a little bit and retest a little lower before it heads back up. What I charted here already has played out, so let's delete that. But we've got two gaps below. I would not be surprised to see it come down here and retest that before it goes up. And the question is earnings going to push it down and then shoot it right back up? Take that liquidity down there, take that imbalance real quick, and then move back up? Do we maybe even see it shoot up above, because there is still bullishness, but then come back down and chop around right after earnings too? Microsoft, definitely, another big tech company where, it's had a lot of good news, but again, right now with the flow too, which is what we like to base our analysis on, alongside with these charts, you can see as of today, the majority of what we see from Microsoft happens to be bearish. Okay, same with what WaveX is showing. We've got about 25, almost 30 mil of puts, while we have a lot of calls that have been sold off. Over $85 million of calls sold off at this point. So definitely more on a bearish side of things. It did go from, since it opened today, Microsoft's just been down. So opened at 544, went as low as 536, 537 or so. Was that the FOMC play, or was that them getting ready for this earnings?
No, that was Azure and 365. They went down with AWS earlier today. Okay. They both had blackouts basically, and that's The problem is, guess what their biggest question is? Azure, because it's a $23 billion question, and it's something they spend a ton of CapEx on in general. So the question comes to basically the long of the short here. If Nadell and Co. deliver blowout Azure numbers and convince investors that the spending binge is strategic, we can see a liftoff. But if they stumble or issue vague guidance, you'll basically see profit taking hit faster than ChatGPT can say rate hike. So that's, but again, they did just get that announcement with OpenAI with the 27% stake in the company. So that could be something that helps lift guidance in a sense with them.
Okay. That is fair. That's very fair.
I think the safest play would be to play the post ER pop or fade tomorrow at market open, because to your point, we could see it just chop around in these liquidity zones before the general markets open tomorrow, and then because we'll have retail, because Microsoft is something retail can still trade as well, and that they do still trade a little more aggressively than Meta. So we should definitely see some a post move that is probably going to be a way safer play at the end of the day, unless you are already in something from, like, I would say the beginning of the month.
All right, Google. I don't know, double check this. Google had a STAX AI print.
Yep.
Okay. Yep. Meta technically had a STAX AI print yesterday, so we'll point that one out. Google had a STAX AI print today. 350 strike for middle of next year. $5 million spent. I will say, out of all the names, Google does have the most bullish flow out of everything right now. The unusual positions that they're getting into here, a few of these right here are actually some shorter term, so these just came in as I'm talking right here for Friday. 277.5, 267.5. I mean, for Google, 160K isn't that huge of a premium, but they are still aiming for it to go up a little bit higher from where we're at today. It is also, I mean, it is one where on our WaveX, it is still showing more puts than calls, and calls have been sold off for today. But if you kind of consider, the yellow line here, consider that compared to SPY, we definitely see much more bullishness on this chart compared to the rest of the indices, the rest of the market right now. So if anything, Google would probably be my pick for an earnings play. Let's take a quick peek over at what the chart says. So just like I said, it's hard to gauge these when they're so high up, because again, the question is, number one, we pretty much already saw an earnings run up. How much of this earnings is already priced into it? We do have some indicators that are showing that we are heavily in the overbought type of area. So a pullback would not be so surprising. Okay. Now, do they give us numbers that, blow all expectations out the water and we just go higher and higher, go test 280, 290, maybe 300? Or do we see this come back, fill some of these gaps that it's left? Even with good numbers, it could come back down and then eventually head back up afterwards. Okay. So yeah, Google and these contracts too, you want to keep in mind, it's always good to peek over at those. What are they willing to get into? That's the question I like to ask myself. Look at the IV right here. 107, 108% IV on these calls for Friday. So while that does mean that this could very possibly double, and that would be normal for this contract, going down to zero is also a normal expectation too. Okay, so
Our stream is in Google from October 9th. Our IV is only 37%.
yeah, there's some low IV on some of these for January,
Yep, that's what
for
we're in.
June. I would say if you have the capital to play those positions, it wouldn't be a bad idea to get into the Google for the long run. I don't think the risk is all that high to be playing this for next year. But obviously this Friday call, right? You've got 2 more days for this one to play out, and it's got to go into the money for you to be, for it to be profitable for you. But yeah, look over here on the right side, Ivy. A lot of the positioning for, right now, all happens to be longer term for Google. So while this gives me the sentiment that it is bullish for the long run, we could still see a pullback right now, and then eventually for it to pop back afterwards. Okay.
Oh, Johan, I can tell you this much: we're still not out of them. Those were called out at 595, and they're currently at 1740. So they're at 191, and we have until January 16th of 2026. So but again, we've been in those since 10/9, and we got kicked in the teeth for a good like 2 weeks before we even saw any movement, which was pretty much this week is when we started to see them actually move. And I think those honestly can see, I think those potentially could go over. I think you could see a good return, like 200, 300% on these if Google does beat earnings and gives 100 billion in revenue. If they announce 100 billion in revenue, nothing else is going to matter. That's like literally their big question. That everyone's like, if they announce 100 billion, they can spend however much they want on capex. They can pretty much say whatever they want after that because everyone will black out and just go on a buying spree.
Next, I've got Chipotle. Chipotle does have some bullish flow when it comes down to Wave X. STAX is a little bit mixed in terms of bigger money sentiments. We do see quite a few calls for November $43, but we also see some puts for 38. So it's kind of split in terms of, do they really expect the upside or the downside of this? One of the ones with more OI I see right here happens to be March of next year, $35 puts. I don't know. I love Chipotle, but I don't think they've done anything as a company to really keep themselves relevant right now. And the last few times I've been to Chipotle, I've been actually very disappointed with the way that things are. It is in kind of a larger bull flag pattern, but with that being said, it's also chopped its way back down to the lower end of it, back toward a point of control. And I do think that it is possible for us to see this maybe even break down to about 35, maybe down even toward 30, 31 is kind of like the lower end of where it is. I don't know if distribution's completely done with this. We do have these big spikes of volume that have kind of pushed price further and further down. They might beat earnings for all I know, but I don't think price necessarily, you know, I don't think it's done selling, to be honest. I think we could still see one more push down before we see it really get bought up.
Bull case, they need to deliver revenue 8% up, and EPS beat of 29 cents. Same store sales rebound meaningfully, meaning a 1% or more gain, showing sign of consumer strength, which if you know anything about the consumer right now, it's like a malnourished child. So if anything, it's not that. And then operational improvements. Their bear case, same store sales remain flat or decline, showing weak consumer demand. Costs rise faster than the revenue, labor, supplies, and tariffs, and that is going to erode their margins. And guidance is weak or cautious, which is going to go ahead and drag sentiment, basically drag ass. So they're entering this report with moderate expectations. Headline growth is modest, and the market will care more about signs of momentum than just headline numbers. Execution and guidance will be critical for them in this report.
Yeah, I mean, I love Chipotle, or I did love Chipotle, but it's definitely one of those companies that really hasn't done anything to, to make me say like I gotta go eat there. Like it used to be
Yeah.
where I saw a it was an Instagram reel about this guy that found some old pictures of the Chipotle menu board from back in like 2017, and it was like $6 for a burrito. And back then you could feed a family of four with a single burrito.
Yeah.
Nowadays they're cheapening out on their rationing out, less and less. Sometimes you got to make sure you go in person instead of ordering online to kind of give them a nudge to try to give you a little bit more. The last few times I went, my chicken was like terribly seasoned. It was like overly salty. um just little things that need to be better with the company. I hope that they find a way to make a recovery, but at this point, I would not be surprised to see it come down a little bit lower after this earnings, unless I know, unless it's different with you guys. If maybe with you see your Chipotle and there you go there often, and there's always a line out the door, but I don't know about that. Carvana is the next name I want to make sure we see. I'm a little bit bearish on Carvana overall, just because I think there's some cracks in their loaning system and the way that they've set it up. They are somewhat overvalued. They're at an 88 PE ratio at this point. Um, you know, it's shown a couple signs of weakness where I think we could come back down to the lower end of this range, come back down toward about 320 or so would probably be the lower end, unless they completely just miss terribly. Cars are getting more expensive. Yes, used cars, they're gonna get some of that. Like we were looking at getting something with 3 rows, and dude, like a brand new car at this point, even for like a Toyota or Honda, is gonna be like 50K. So I can see why people, turn toward the used car market. But the question here is that Carvana itself kind of a bubble at this point? Okay, that's kind of the question as of now. So Carvana, we do see some puts take. Oh, these okay. That one's an eye opener. Puts for Friday came in today, 355. Okay, so they're in the money here, but they're not expecting to lose $2.5 million betting on this to the downside. So maybe it chops around and it starts moving down by Friday, is what this one might be. They're 200% IV as well. The fact that they're willing to get into that.
We also have someone selling puts at 350, 850K as well.
Oh,
So maybe those are related.
maybe.
Who knows? There's too much time in between them to really say, but yeah, their biggest problem, they have a high valuation. Heavy insider selling is occurring. Used car demand is softening as rates are staying high, and rising credit delinquencies hit the loan securitization revenue. God, I can't say that. I can't read some of these big words very good. So basically, it'll either fuel the comeback king narrative or it's end it in spectacular fashion. Bull case, they need to beat EPS, show stable credit, which shows a short squeeze. Their bear case, the valuation overheats, the macro is going to slow down their business, and that's going to allow them to go into the crash landing that at the levels that Eric was talking about.
Yeah, WaveX kind of is mixed at this point. You definitely have a little bit more of a bullish sentiment, but I mean, 1.4 million in calls to 1.2 million in puts sold. That really doesn't say too much to me on this. My thesis overall for Carvana as a company overall right now is more bearish than anything. So, again, you don't have to play any of these. You don't have to play all of them. Pick out the ones that you like. I would right now say that Google one is probably the one that I have the most or the highest probability behind. Starbucks is also going to the okay. WaveX doesn't really have too much going on in here. Just a few $100,000 of calls to. I mean, the puts did get sold off, so that could be an indicator. People need their Starbucks. Pumpkin spice season might be the catalyst for them at this point. And the other one I want to make sure I get you guys is ServiceNow. ServiceNow does have some calls that were sold off today and some puts that were bought earlier this week. So maybe on the bearish side for this company here, we do definitely see more bearishness for ServiceNow. Let me pull up the chart before. Yeah, it's coiling up. ServiceNow, it's gonna break in either direction, so it can go up or down. I would definitely say, you could argue that this is it already broke down below and it retested it and now it's coming back down, or you can give it the give it the benefit of the doubt here and say, okay, now we're still looking to break up or down. But overbought on the daily, weekly, a little bit low on the lower end, but could go in either direction. I would probably put my bets onto the downside for ServiceNow. 119 PE ratio is pretty high up. All right, let's see. I'll pull up our charts for as market closes. Do Meta and Microsoft as the two main ones. We'll see what ends up happening. Markets.
Ooh, a nice recovery to 546 on Microsoft on the daily today would be super prime. It's got that whole demand zone it can go discover price at. That's crazy for Microsoft. It's the battle of the CapExes.
This point, we've got, of course, Amazon and Apple tomorrow. Forgive me, just about 30 seconds, but which one do you like or feel more confident about?
Oh, didn't STX already report?
I think.
STX.
Yeah, reported Q1 2026 revenue of 2.63 billion.
Shot up like crazy today. Up 20% today.
They were pre-market then, right?
They were after close
or
yesterday.
after hours yesterday. Okay. Yeah, so they didn't even, because if you look at their pre-market on the 5-minute, they didn't move for shit.
Yeah, they shot up in the morning.
Like that.
Up
That
20%.
was one of those.
That's nuts.
That's one of those good reports, and it doesn't pop till the next morning.
Crazy. Yes, STX flow is still pretty bullish. I mean, there's another call that came in here today in the morning, so they already caught that move for 260. And WaveX for STX still looks bullish. It's got more calls than puts. STX moved well today compared to the rest of the market. So
That tells you something.
do me a favor, you guys. I see 25 of you guys watching. Do us a huge favor and hit that like button on YouTube for us. We get on here, do our earnings reports, help you guys out, show you guys what STAX is doing. But help us out. Hit that like button, that thumbs up. Does us a huge favor because we got to play the algorithm. We got to try to figure out how to get them to show our channel to more people. Our goal is eventually to get 50, 60 people, over 100 people watching our Wednesday show. Make it a routine. If you guys want market news, you guys want to see what's going on with the flow, we'll be up here to help you guys out. And as always, we're here to help answer any questions for you guys. If you don't know how options work, you don't know how to trade. We do also have our Investor Central Academy series being released. You guys can get that every single Friday. We're releasing a episode. There's about 20 episodes total, but it should keep you guys on that learning track so that eventually you guys can learn to trade just like we do. Make sure you're hitting the thumbs up and not just the hearts. I love the hearts as well, but hit the thumbs up on the actual channel and on the actual video. That helps us out a ton. I hate having to ask for it, but it is just how these things go. I will say right now, peeking over at STAX, we are seeing quite a bit of bullish flow come in right now. A lot of SPY calls. I will say we've been recently seeing a lot of puts being taken as market closes, especially for like IWM and things like that. So seeing these calls come in is actually a great sign that we very likely will be seeing higher in due time. Microsoft, Meta, little end of day pump. They very likely are not going to report for another 15 minutes, so we got to be a little patient with that.
Real quickly, NVIDIA got to mention, market cap today, stock up as much as 5.5% earlier in the day.
That's crazy. NVIDIA is worth 16% of the US GDP.
That's nuts.
5 trillion. $5 trillion. Google is a ripper.
2.5%, 3% so far.
I mean, hey, we're in the money. We're in the money for those STAX call outs.
Yep. See how it continues. Nothing for Meta so far. Microsoft's starting to move.
Yep. NVIDIA's worth 2 Canadas.
Microsoft just reported Azure and other cloud services revenue up 40%. Microsoft's still down for the day.
It's probably their guidance.
Google's up about 4% now.
Meta's just dicking around at this point.
Meta's probably waiting for them to finish their... haven't seen their report just yet.
Ooh, Google. Hello.
Moving. 3.5.
Yeah, so the simulated return right now on those Google 280s that we're in is 25.85 currently.
Still going.
We're halfway to my prediction. I said if Google does what it needs to do, these contracts might be worth $50 a con.
Oh, hold on. Oh, Microsoft dropped.
Yeah, it sold off heavy.
Yeah, Microsoft's down 4%.
I bet it's a CapEx issue. I'm willing to bet it's a CapEx issue.
Told you guys Google was the bullish one.
Oh, damn, the Azure outages are under review. That's not good. Their $23 billion golden child is under review?
Meta fluctuating back and forth. Oh my god, look at that candle.
Google, what are you doing to me?
That is down. Starting to drop hard.
Well, think about it. Azur's 23 billion of their crap. Oh, Meta. Oh. Oh. Clearly we're not getting a stock split. That's for damn sure.
Nope.
We are not getting that stock split, baby.
We called this out, man.
Mm-hmm.
We called this shit out. Basically showed you guys what the flow said. It was very, you know, you guys could look back on it. It was pretty obvious that Google was the bullish one out of it. Yeah, definitely.
712. I mean, if you shorted Meta into earnings, you just got paid. Oh, that's true. Red day tomorrow? Yeah, if we only have Google being the only one as a bright spot here.
Yep. I told you guys, markets are a little bit overextended to the upside. Down we go would not be terrible. I mean, it wouldn't be anything out of the ordinary, to be honest.
You got those gaps we got to fill.
A lot of these ran up so hard going into their earnings. Google up 6.3%, Meta down 5.7%, Microsoft down 4.5% almost. Got Chipotle. Did they report?
They should. I think so.
No,
they
not yet.
might not.
Not
They
yet.
might not till 15.
No.
They might be a 15er.
It says 110 for me right here. Okay. Carvana. Look, Carvana dropped. Hey, I was right.
Yeah, that evaluation is insane. 90?
Yeah. Service now, nothing yet. What else am I missing? Starbucks. Starbucks is up. Pumpkin spice season. 3%. Nothing huge, but.
Well, they're going through a restructure basically. So if they show positive signs of shifting their company culture and all that other crap.
Meta's down under 700. Yeah.
Damn.
Down 8%.
Damn, Meta.
I mean, STAX had it all spelled out for you guys. Microsoft beats top and bottom and a $20 drop. I mean, keep in mind, number one, a lot of these earnings you see run-ups to it, so you already have expectations. Number two, just their report does not always correlate with how the price is going to move afterwards. And at the end of the day, you know, retail is generally going to be used as liquidity for a lot of these big institutions. So as much as, yeah, Microsoft numbers might have been good, but you do also notice with today, with the Azure outage and all that, that's very likely going to be correlated into this. Is it going to get bought up? Is it going to recover in time? I would say there's a good chance that the contracts for, you know, the call contracts for Friday are going to get eaten alive. And if Microsoft does continue to move up, it's going to be next week or the week after. They have the ability to wait it out a little bit more. Ooh, here's something to consider too. If you guys peek over at STAX right now, just flipped bearish. Everything just flipped bearish. We saw all these calls come in right at close, and then just about a minute or two ago, now we see a bunch of these SPY puts coming in. Let's go back. Carvana's down 10%. Starbucks up 2.5%. ServiceNow up 3%. Microsoft down 2.8, 2.7. It's coming back a little bit. Meta down, starting to come back a little bit. It's testing 700. Meta's down about almost 7%. Google over here, we got up about 4%. It was a bit higher. It was up to like 6 to 7% at one point. But it's earnings season. I think markets were overly optimistic. And yeah, only Google was able to really beat. How am I able to see after hour flow? Well, options do have about 15 minutes where it gets to report, or you get to buy options for the indices. So SPY, QQQ, IWM, these bigger ETFs. You do have 15 minutes after close to continue to trade. What I generally see is that institutions will take that opportunity. It basically gives you kind of like I think of it like an ending score, like the candle for the day or the candle for the week has finally closed out, and they get to make their decisions as to what positions to get into after that. And so those last 15 minutes often gives you insights as to what they're expecting for the upcoming week, for the upcoming days. Carvana's still down about 8%. It should be. I think it's dependent upon your exchanges. I know for Robinhood, for Webull, you can still trade those last 15 minutes after close. I don't know about the rules there in Canada though.
All right, so Microsoft down 3.3%. You got Alphabet up about 3.5%. You got Meta down about 5.7%. So those are big ones that we'll keep a watch on as we go into those calls with analysts and investors. Folks, that's a wrap. Cross-platform radio, TV, YouTube.
Yeah, I have a feeling some of these dips are just gonna get bought up pretty quick too. Like Meta at 700, I think people are gonna be excited about.
See you again, same time, same place tomorrow. This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Nasser and Tim Stenbeck.
Is there anything?
Bloomberg Radio, television, YouTube, Bloomberg Original. All right, everybody, we continue on this Wednesday. Big drop of earnings, as we mentioned. Really, three Max.
ServiceNow went higher. Yeah, Chipotle and ServiceNow both went higher. I was wrong on those.
We've got Alphabet. It is up about 4%. So pressure on Microsoft, a rally in Alphabet, and then you've got Meta right now. It is dropping in a big way. Tim, we've got that down about 6% here.
Yeah, so long term, Meta says it expects a significant reduction in our federal.
Yeah, markets have been needing this pullback. So, like we said, either earnings were gonna push us up way higher, but there was a lot of overbought, a lot of overextended names, and I don't think it's a bad idea for these to come back down. eBay reported
Yeah.
down 6%.
Reduces net income, which is something that looks way below what everybody thought it would be.
What is this charge then?
That's a question that you're gonna have to ask on.
Chipotle cuts same store sales forecast for third straight quarter, yet they're up 2%. Carvana's still down 8%. Not moving up that hard. Meta's back over 700. I didn't expect it to stay under 700 for too long. Google could make another push up. See if that bounces higher.
I think it does from the conference call.
Yeah. That's very possible.
terms of their expenses and so on have gone up about.
That's where they justify like their spending and their capex and all that kind of stuff.
The AI spend, say you need, gotta get ahead of all of this to meet the demand, but will that ultimately pay off?
Yeah, let's put some numbers there. 66 billion to 72 billion as of June. That was the 2021 CapEx guidance for the year. Things have a little bit to 70 billion to 72 billion. It's coming in at the high end of the original range. But if that's what it's going to be for this year, and then the company says CapEx dollar growth will be notably larger in 26 than 25,
Right.
how much bigger than 70 to 72 billion dollars?
Exactly, place of the spend. I will point out third quarter ad revenue, that was a beat, 50 billion versus the estimate of 48.59 billion. If you recall last quarter, we got to this and we saw how the company was monetizing the AI spend. So there are still some more questions to be known. Again, I'm just going to pull up Meta here in the aftermarket. It's
Meta's profit hit by 16 billion one-time tax charge.
Ooh.
Yeah, revenue did beat estimates. Microsoft reported revenue for the first quarter, or Azure and other cloud services revenue ex FX for the first quarter that beat the
I can't feel good.
77.67 billion. That beat
$16 billion tax charge. Damn.
That's
That is nuts.
forget the $100 billion question. Answer the $16 billion audit. Can't put lipstick on a
That's
pig.
crazy.
and
It was related to the big beautiful bill.
Wow. Was Zuckerberg not playing nice with Barron?
I mean, during that dinner that they had, he said what the president wanted to hear, remember? Like,
Yep.
is that the number you wanted? I know we didn't discuss it.
Like, what? That's a crazy statement to make.
Oh, hey, I mean, if big business is actually getting taxed like this, who knows? I don't really know what to trust anymore with the news, to be honest. But hey, 16 bill. 16 bills. Still not enough for them to send to Argentina, though. He's still 4 billion short there. Alright. Let me do this. You guys can keep an eye on to what the tickers are doing. I'm gonna pull up a couple more earnings because I know you guys on here for YouTube might not necessarily get to see us. I would definitely suggest joining us in STAX if you'd like to, and that way you can get these additional ones. We got Apple, Amazon, and Coinbase, MicroStrategy. Let's go over those. So Apple's looking bearish too as of today. Keep in mind we will get a better idea of what's going on tomorrow for Apple. If I were to take a look over at the chart, got up Apple's chart. That's been pretty strong overall, I would say. Yeah, it is at that all-time high. So I wouldn't be surprised to see this kind of come back down. We already saw it go up higher like I drew out. So now that that's done with, I would actually say for earnings, maybe come back to retest this breakout before we head higher. So back to like 260 maybe is a possibility for Apple. If we continue to see this bearish sentiment like we see here, that's a lot of calls sold off. $114 million of calls sold. Still quite a few calls being bought though, but again, we are at all-time highs. So that's kind of where the bias is here. 270. They did say something about how this is the best iPhone that they've had in terms of sales. Their iPhone Air was a huge flop though. So there's something saying that it was less than 5% of their total iPhone sales. For, you know, in terms of models, iPhone Air is doing terrible. They also have to cut the production for it. So, you know, but if the overall sales for the iPhone are going to push their numbers up, that could be a possibility. But the risk with these types of positions is just the fact that going into earnings with them being at all-time highs, you know, how much of it is priced in, and are they going to be able to show, you know, show that you know they've got a better guidance for the future. I will do this again too. Google, if you kind of notice, now that we saw Google move up, you'll see how Google was the only one. Oh wait, why is this doing this now?
I know this isn't typically your coverage, but you know, you're smart, you cover all things.
I gotta look back. Google had much more bullishness.
See this
I don't know what happened here with this chart.
one-time tax charge, I guess.
That's interesting.
Figure this out, but is it all about that, or is it just
I'm gonna have to look back on our recording. Right. Yeah, our chart for Google earlier was showing something completely different. I don't know what just changed after the close. Next, I got Amazon. I'll look at Riot too. Amazon, WaveX, a little bit bearish, but there are calls being bought here. At the close, though, we do have quite a few big money calls coming in. So there might be a little bit more bullishness for Amazon at this point. Let's take a look over at the chart.
Question to him about that platforms. The company saying that the implementation of the One Big Beautiful Bill Act led to the recognition of a valuation allowance against our U.S.
So I've got Amazon kind of possibly just continuing up in this channel. There is a little bit of weakness that we could maybe see a sell-off come back toward about, I'll say 220. There is a gap down here that was already filled. We still, ooh, there is a gap down here though. 210, so 220 or 210 are definitely possible. There is a bigger gap down here too. I don't know. I don't necessarily think it's going to come all the way down here. Back to 200 is crazy though.
I mean, you don't think those layoffs? Oh, you don't think those layoffs are going to affect anything?
You know, the weird thing about layoffs is overall they tend to be bullish for the company because they have less to spend on a cap, you know, their bottom line.
Yeah, that's true.
They already employ like the most robots out of a lot, you know, any of our bigger companies. So for them to continue to do that, I wouldn't be surprised for them to, you know, the layoffs to be a positive. It's two-sided. Let me give you my two-sided thing of that. Yeah, the AWS, I already talked about this on Monday and Tuesdays. It was interesting to see that the AWS outage actually pushed their stock price higher because people realized how essential that they are, and without Amazon Web Services, basically the internet does not exist, right? Then on the other hand though, so yes, laying off people for their company does end up being bullish because they spend less money on that, you know, on the expenditures on payroll and things like that. However, where does the line get drawn where the layoffs lead to lower consumer sentiment? Because if they are laying off more people, there's going to be less money flowing, like not just them, but overall everybody's laying off people, meaning that there is the high probability that we are headed toward a recession or are in a recession, leading to lower expenditures, people spending less on, you know, services such as Amazon, right?
Yeah.
So hard to say on that side of things, but at the end of the day, flow right now shows a little bit of bullishness, at least going into the close today. So that's something to consider.
Oklo, that is a company that doesn't have any products and makes no money. So no one ever knows what's going on with them because there's no reason that they should even be worth this much that they are right now. Like it was what, $9 a share this time last year or something insane.
Nuts. All right, what else? Coinbase. Ooh, that's Coinbase looking kind of bearish right now in terms of flow. Again, take a look at it tomorrow, but as of right now, Coinbase looking kind of bearish. There's a lot of calls being sold.
Research Director, Chief Investment Officer with Tigris Financial Partners, Anurag Rana, of course, our Senior Tech Analyst here at Bloomberg Intelligence. Ivan, other companies that reported, Meta obviously caught our attention. We just talked with Microsoft.
We do have a couple of gaps down below here that look like they could get filled. Ugly gaps down here. I don't know. You got anything to say about Coinbase, Max?
Yeah, I just did their thing earlier today. Let's go ahead and pull that up. So it's being noted as crypto's comeback quarter. The bear case is the first thing that comes up, and it's the EPS estimate revisions have trended down overall. Insiders have dumped about 1.7 million shares in the last 90 days. Retail interest in altcoins is fading currently. Their PE for some reason is like 5,000 or something crazy like that. And even with JP Morgan and BTIG pounding the table, Compass Point's downgrade earlier this fall reminds investors this stock bleeds hard when volume dries up. The bull case, though, trading volume rebounds sharply. USDC yields and stacking fees are growing steadily. Base token speculation drives a mini crypto mania feud, and Trump-era crypto deregulation narrative fuels inflows in the U.S. So it's one of those things. Transaction revenue stalls, service growth flattens, no major updates on base or layer 2 rollout, and institutional flow cools post ETF euphoria. That's your bear case. And then Coinbase isn't just a crypto exchange anymore. It's trying to be the bank, the blockchain, and the broker of the decentralized world. If Q3 proves those streams can print money without a bull market, the stock could cement itself as a permanent fintech powerhouse. But if trading volume dips again, expect the market to treat it like a tech casino all over again.
Yeah, I feel like it's been kind of quiet on the crypto front. The only crypto news I keep hearing is just basically Trump and how they're manipulating things and how they benefited off that last Binance issue, the last little crash that we saw. So that also leads into this. Oh, hey, look, MicroStrategy. I said it was going to come down, and it has. I think MicroStrategy is coming down under like 250. I think sooner or later something's going to happen with Bitcoin that causes MicroStrategy to buckle.
Yeah.
MicroStrategy, Flow, WaveX is also bearish. We do have some people getting into calls, but those are super pricey. We got some puts being bought for 170 for next Next week. Ooh.
Ooh, someone in the chat said the CFO is released.
From MicroStrategy?
I think so. Grandizer, is that what you're talking about? MicroStrategy CFO is released?
That's nuts.
Let's see. News.
Yeah, I mean, Michael Saylor bought another 390 Bitcoin for $43 million 2 days ago.
Oh, that's Binance.
Oh,
That's
yeah,
Binance.
Binance,
Okay.
yeah. No, like, DZ, they actually, didn't they pardon him? So,
Yeah.
I mean,
And
it's
Trump
just,
just said, I didn't know anything about it. The last administration did that to him, and I heard he was a nice guy, so I decided to pardon him.
you can also go bet on whether or not Trump is Satoshi.
Oh, yeah.
I think that's like the easiest money you'll ever make. Unless here's the issue. If he says I am Satoshi, does that count? Or does he have to prove it? Because I could see that happening. I could see him be like, oh yeah, I am the greatest. I am Satoshi. And then all of a sudden people that bet against it now are shit out of luck.
How do you regulate that?
Exactly.
Because talk about a lawsuit for like Kalshi and Polymarket.
Yep.
He comes out and goes, I'm Satoshi, they pay out. My alt pick outperforming all alts.
Got Riot for you. Oh, Riot's actually looking kind of bullish. Flow is kind of mixed, though. You don't really see them buying calls. Oh, that's a decent size, 2027, $20 strike.
Near their lows in the aftermarket, down about 9%. I'm just saying.
For that, I'd say this is going to be what cell phones were in the 90s.
I mean, their last earnings...
They are more pyramid. They really like it.
Was it their last earnings? Yeah, their last earnings, they finally showed something decent on their balance sheet.
The aftermarket. What do you like? What
So Riot,
in their release?
their last earnings, they beat EPS by 356%. Their estimate was supposed to be negative, so maybe they're headed back up. It does have a little bit of an accumulation look to it. GLD SLV.
There's some calls getting bought
Yeah.
towards market close.
Silver is fairly manipulated, to be honest. Silver should be moving higher, but it really hasn't. It's been lagging. Gold. I mean, we continue to devalue the dollar. Gold will continue to go up. But I find it pretty nuts that so many people jumped in at 4,000 or like over 4,000, and it's definitely come back down since there. You guys got to start to realize when is the top in? The top is in when everything is talking about it. So when we hit 4,000, all the outlets were talking about how overseas you're seeing these lines out the door for people to go buy gold. They even shut down gold buying, physical gold buying at certain places, and it's down like 10% since. So, you know, just understand that when everybody's talking about it, you got to start being a little bit more, you know, doubtful about that it's gonna keep going up. You gotta let that fervor kind of die down. But I mean, overall, if we do continue to devalue the dollar and all this continues, gold will still have its place and it will still have its value.
Meta back below 700, by the way. It touched 682.
That is nuts.
Microsoft is recovering. because they're going to get on the conference call and talk about how the deal with OpenAI is going to net them 50 billion annually for OpenAI Azure services. So
Google's still up there.
that's not coming back down.
Carvana came back a little bit. Chipotle went down. There we go. So I was right about Chipotle.
And like you always say, the first move in earnings is not always the right move.
Yep. And I need to go back. So I said Google, I was right about with STAX. Meta, I was a little doubtful on because of how high up it was, but I did say that if it was to go up, it's one of the ones that's not completely at the top. I did say I didn't think it was going to come down all the way down to 700, so I will say that one. Microsoft with the Azure situation, I would told you this looks like a double top, but we very possibly could come back down toward these gaps. We already filled both of these gaps. We are back at the top, the lower gap here at this point. Carvana, I said I was bearish on. Just moved faster than I had charted. Chipotle, I said I was bearish on. Faked us out a little bit. Basically, it went up to where I had drawn where this point of control was, and it's come back down from there too. Service now, I believe I said I was more bearish on. It's up, but kind of just fluctuating. 4% up from where we were. Started to break up above this wedge that we have. StarBucks, I said bullish on because of pumpkin spice season. It's only up 1.5% though, so. All right. Oh, a couple of things you guys wanted. Unity is kind of back at that spot where you could start building a position. There is a possibility we could still come down a little bit. I'm not convinced it's ready to move up just yet. Especially with market conditions and everything right now. There is a possibility we will see. In due time, we should see Unity higher. My chart right here basically shows that we are finishing up that accumulation zone. So let's see when this does finally happen. See if this plays out for Unity. Riot's past earnings was very good. We do have a lot of volume coming in. It is very heavily based on crypto, and crypto is kind of just stagnant right now. Overall, though, this does have that market psychology look, market cycle look, where if Riot can break up above 24 or so, it does have some room to start running up higher. The issue here is the fact that it does not have to happen with earnings. Earnings could bring it back down toward about a little under 20 or so, 18 to 19 before it heads up higher. I looked at STAX, and Riot doesn't have, I wouldn't say anything necessarily completely determinate right now. Right. You got some puts being bought. You have a few calls. A lot of the unusual stuff happens to be puts. You do have some calls. Like if you were to play Riot, this one would probably be the safe one to the upside. 2027, $20 strike from where we're at. And technically, it's already up. This position's already up. Riot's already moved up from that. So these guys are in the money already. That's crazy. Riot does have a little bit more bullishness than bearishness right now, so that is something to consider. Yeah, Unity around 35 wouldn't be too bad. You got to be able to hold on to it for a while. That's going to be a long-term play. That's going to be something that you can look back on in 2026, 2027, and it should be much higher. All right. Anybody got any last comments? As always, do us a favor, hit that like button so that we can play the YouTube algorithm. Trying to get our views up and get more people to subscribe. If you enjoyed this, if you're a new watcher, make sure you hit the subscribe button, hit the notification bell. It'll help you make sure you're notified anytime that we do go live. Every Wednesday we'll be on here. And if you are a STAX member, if you are in our Discord, we go live just about every single day, Monday through Thursday, basically. Sometimes on Fridays, depending on what's going on. If you're not in our platforms, you do have the opportunity. Use eRoo Love STAX for 20% off STAX. If you want a lifetime membership to our Discord, it does include the videos for Investor Central Academy as well. You can use lifetime 20 for a lifetime membership with us in our Discord. Lift December. Yeah, Lift is looking good for the long run. You just got to be patient with that one too. All right. Thought today was pretty. Today's show was pretty good. I enjoyed it. I thought we made some pretty good predictions, and STAX led the way for us as usual. Discord audio has been giving us some issues lately. Some people have to reconnect if it doesn't work. I don't know what happened, but everything's working fine on my end. And it seems to be individual issues on people, on the receiver's end. So, but Discord, I like Discord because things are more real time. YouTube here has a little tiny bit of a delay from when I'm recording it and sending it to live. There's about like a 5 to 10 second delay in most cases. All right. Thank you guys for joining us. Hope you guys enjoyed our show. Be back on YouTube next Wednesday as usual for earnings. If you guys want any additional stuff, you guys have all the links down below in our description box. You want Max's Substack, you want to subscribe to us, everything's in there. If you have any questions, you can always go to email us, help@investorcentralclub.com. We're here to help answer questions. If you have any issues with signing up, things like that, let us know. All right. Have a great rest of your guys' day. Enjoy your Wednesday. Enjoy the rest of your week. Hopefully some of you guys that got into some positions for earnings for tomorrow open up with some nice fat gains for you guys. So you can go get a nice steak for yourself this week. Have a good one, you guys. We'll talk to you guys soon.